Hey everybody, I hope you're all doing wonderful. We have another monthly portfolio update. So in this video, I'm going to share with you how this portfolio performed over the last month and also share all of the dividend income that I've received over the past month. I don't do this to brag or gloat or anything like that. Really, my goal is to be completely transparent and show you guys what you can expect to see in an investment portfolio. So starting off here, right now the portfolio overall is valued at about $37,487. The total dividends earned throughout the life of this portfolio has been about $3,000, and the overall market gain is just shy of $10,000, which puts us at a money-weighted return of 74%. If we check out performance over the past month, it's actually been pretty good. So here early in June, we started at roughly 36,000, and then in mid-June the market shot up quite nicely, going up all the way to 37,400, and then it stayed pretty stagnant for the rest of the month. So overall, I'm pretty pleased with that. But at the end of the day, I don't really care about how this performs over a month. I'm really focused on how it performs over the long term. But just checking out the performance of some of these pies here in M1 Finance, which are essentially just groups of stocks that I have. So everything was pretty standard except for technology, which you guys can see jumped up almost 18% the past month. But everything else, like ETFs are up 2%. My finance holdings are up about 1.5%. And then to balance some of those out, you have industrials dipping about 2%. So companies like Genuine Parts Co. and Fastenal hurt me a little bit here. But then if you go into tech, you can see companies like Apple, Microsoft, Broadcom, and Tesla. I mean, especially Broadcom and Tesla, those jumped up over 30%. So it's nice to see that some of these tech companies had a good rebound this month. I know for the most part, they've been pretty much decimated over the past year or so. So maybe there's an AI boom, but pretty nice to see overall. And real quick, before we hop into the dividends, I'm not sure if you guys are an M1 Finance user, but I do just want to point out one feature that they recently released, and this is dividend handling. And so essentially what this does is that you can allocate what happens to your dividends after you receive them. You have a few different options. So number one, you can just have it added as cash to your account. So if you do that, you can do literally anything you want with it. You can reinvest it back into your portfolio. You can put it into your checking or savings account so you can withdraw it from the platform. The next option is that you can actually reinvest it back into the security which paid it out. So if you got a dividend from Apple, for example, it would actually take that dividend payment and reinvest it back into Apple itself. And the last option is that you can customize it per security. So if you have a particular holding that you want to invest your dividends into, you can do that as well. So some pretty cool features here. Gives you a little bit of flexibility on how you want to handle those dividends. Now let's check out the dividends and see what we earned for the month of June. All right, well, starting off, we got $14.02 from Aflac. This is an insurance company. Then we got $6.44 from pharmaceutical company Johnson & Johnson. Another pharmaceutical company, this is Eli Lilly. I bought a lot of these during COVID, and they've actually performed quite well over that time. But Eli Lilly was able to pay out $2.40 this month. Then ExxonMobil is next, and they paid out $3.54. Then we go on to 3M, which has admittedly performed pretty poorly over the past couple of years. So I haven't added anything to this particular company yet, just on a holding pattern with this one. But they were able to pay out $1.85. Then we go into Home Depot, one of my favorite stores to go to for tools, but they brought in $4.82. Then we go to Microsoft, and with Microsoft, historically, they've been a pretty high growth company that tends to pay out a lower dividend yield. So if you look at their stock chart over the past decade or two, they got that hockey stick growth, but have a fairly low dividend yield because they reinvest their cash back into the company since it's a pretty competitive industry. But since they have started paying a dividend, they've been able to increase their dividend year after year by a substantial amount. So if you're looking at a company from a dividend growth perspective, you may want to check out Microsoft. But they paid out $2.03 this month. And then Realty Income Corp, this is actually a monthly paying real estate investment trust, but they brought in $6.25. Then utility company Consolidated Edison, a very non-interesting company, pretty much like all utility companies are, but one thing they do bring is stability for the most part. So Con Ed brought in $1.20. Then Stag, this is an industrial REIT, again monthly paying $2.67. And then McDonald's, of course everyone knows what McDonald's is. It's actually a pretty nice worldwide brand. It's kind of cool when you see those videos of people going to McDonald's in different countries, and it's just like a lot better than what's in the US. But anyway, this month McDonald's paid out $3.36. Waste Management, $2.29 from them. Then BlackRock. There's a saying that BlackRock pretty much owns every other company in the world because they're an investment firm and they have a stake in almost every company in the world, at least a lot of the major ones. But this month they brought in $7.86. Then we got a pretty nice payout from an ETF. This is Vanguard's high yielding dividend ETF, ticker symbol VYM. But they had a nice payout of $17.93. And then we go into Brookfield Infrastructure Partners. They had a few different payments here, but overall they paid $6.56. Then we had that really nice performing company, AVGO, over the month of June, and they brought in $6.82. And then to round everything off, we received $6.55 from an ETF called SPHD, which is actually a monthly paying ETF that focuses on more of the higher dividend yielding companies on the S&P 500 that tend to fluctuate in price less. But with everything added up over this month, the total that we've received is $96.59. So it's a little lower than I expected because there were some companies that actually paid out in early July that typically pay out in the end of June. So next month should be a little bit higher, but overall pretty pleased with that. If we look at this time last year, we're roughly about where we were, just about $5 less than last year. And from last quarter, just a few dollars lower. But again, some of those companies paid out in early July. So overall, in the last quarter, $239 is what was paid out. Oh, and by the way, before I forget, if you guys do want a copy of this spreadsheet, I have a link down below in the description. But you can just click on File, make a copy, and then you can save it to your own Google Drive. But with the income received over the last 3 months, I have it broken down here into yearly, monthly, weekly, and daily wages, as well as hourly. So if we take the last 3 months and expand it out, we're looking at roughly $959 monthly. And if we bring that down to what we would earn every single day, it's about $2.63. Or if you want to look at it hourly, so every single hour you're alive, you're going to be earning about 11 cents. So it's definitely not life-changing at this point, but it's a good concept to think about. And hopefully it can get you motivated on truly expanding this portfolio. So whether it's investing more money every single month, reinvesting dividends back into the portfolio, and investing in companies that actually increase their dividends year over year, well, then you're going to be set up pretty good over the long term. So it should be very exciting to see where that goes. But that's it, guys. That's going to wrap up the video. Thank you all so much for taking the time to check it out. I appreciate each and every one of you. Until next time, take it easy.